beginning right about now. Okay, so like I'm saying, basically confluences, all right? So confluences are basically meaning confirmation. They're the same thing as confirmation, needing, whatever kind of stuff you need. But in order to enter a trade or exit a trade, well, specifically in order to enter a trade, you need about 3 confluences, okay? So this could be a prime example of confluences in terms of retail strategy. I don't even know what all this is, but what I'm going to tell you is basically psychological support, trendline axis support, and bullish pin bar are 3 confirmations, right? So there are no breakage structure here. There's no nothing. All you can see is a bullish momentum, okay? So technically that's why price went up. But like I said, this is just an example of using confirmations. This is not how I trade whatsoever. I don't even know what a psychological support is. Like I said, there's going to be a variety of, formations out there. It just depends on who you learn from. I'm going to say it again and again. So it's up to whoever you learn from. But this is just an example of using, confluences and all that. I will demonstrate them in the chart. Just another example using, Fibonacci's, where it comes down to retrace maybe to 68, the axis support, and then a pin bar, I believe, is another what's it called? It's a candlestick formation, or rather candlestick pattern, which I don't pay attention to as well. And then of course, I don't know what their third confluence is. I don't know what it is, but you're supposed to have at least 3. If you want to use 2 and gamble, I'm sorry, not gamble, and take a risk, you can. I aim for 3 to 5 confluences because it's better for me, and I just think it does better. It's more safer in a way. And then our last example will probably be, honestly, this is not an example. These examples are pretty terrible to me, but this is just a general idea of what I'm going through. Okay. And next up we have volume. Volume works. Let me see if it's indicator. Needs indicator, but let's go ahead and take a look at this. Alrighty. So the next thing we have here is basically volume. Okay, so I don't really know if I wanna. This looks like it might be a good example. I'm still gonna demonstrate. I'm just showing you everything directly through pictures real quick, and then we'll translate to the charts. And then, so the volume indicator is just something I use to measure like, to see how fast or how strong momentum is at the current moment, to see whether it's fast, strong, slow, all that kind of stuff. Okay. So, but what we have here is that I can see that, getting a little in there. Okay, so I'm going to take a quick look at this to see if this is the best idea if I want to. No, it's not. It's not. I'm just going to teach y'all from the chart, but Wyckoff, this is something I want y'all to actually learn. It's basically how I predict price, other than, because when I told y'all, I just use market structure to see whether it's bullish or bearish, but I strictly enter based off Wyckoff. Okay, so Wyckoff is pretty, it gets more deeper than this little article, but what I'm going to tell you is, as you can see plenty of breaker structures, right? This shows bullish, fake out, and then your initial breaker structure, which caused that last sell-off, and then price break structure again. So you want to enter around phase D, which is somewhere up there, to take it up to the upside. Of course, you have distribution as well, so there's also a lot more examples. This formation is in stock formations. Like I said, it's going to be an article you want to go through. But it's not something I want to go too in depth with, but I will show you general examples in the chart formations. Okay, so like I said, I'm not going to do too much based on looking at this right here, but we will take a look at using, let me look at the list one more time, using, make sure I'm not forgetting anything. Let's see. Confluence, volume, entries, and Wyckoff. Yeah, the very last one to be entries, but as you know, I've been going over entries for a little bit while now. It just haven't really detailed on them, but as you can see, I'm going to be more directive on what entries are in this particular webinar right here. So, yeah, I guess. All right, so here we go. So, okay, let me see. Do I want to go over KXY? Do I want to go over a stock pair? Let me take a look at something. Let me think real quick. Whatever. Let's just go over. Let's go over. Someone just tell me which one to go over because I cannot choose. Let's take a look at. Actually, let's take a look at this one. Okay, so if you have people in the waiting room, let's see middle. So this is basically the homework we're gonna go over. As you know, when I sent the homework last week. So as you can see, if you said it was bullish, you were right, because technically your targets would have been up here. So yeah, you were right if you said bullish, but we are going to go over that basically. Okay, so as you can see here, there is some wipe off. It's just incomplete, which is why there's a major sell-off here. We are now bearish, but let me get this out of the way real quick. Okay, let me get this out of the way real quick. All right, see this. Okay, so going over this, all right, I want to show you a little formation of accumulation, okay? But like I said, it's an incomplete wipe-off. It's not the most perfect example, but I'm just trying to show you a general analysis of how you piece your picture together in order to enter a trade, okay? So as you can see, if we hypothetically speaking, is this side, is this SC, ST, ST, ST? Technically it's right there, okay. So let me just go ahead and get this horizontal ray going, and then I will begin teaching in. Okay. So yeah, my laptop's acting a little off right now, but let's go ahead and get started. So as you can see here, we have Hexo, okay, but this is INT. Let me just go ahead and get Hexo back in. Yo, why is my laptop going so? What's going on? Let me see. Make my other one. Okay. There we go. Perfect. Okay. So I'm going to take it to the 1 hour. We're going to stretch it out across, and we're going to take a look at this. And then, yeah. So let's see. Let's get started. So what we have here is that, as we can see, this right here will be what we call your preliminary support. Okay. So basically, this is where like some type of buying occurs. As you can see, it comes down and then goes up. And remember, I said this is incomplete wipe off. It's not complete wipe off whatsoever. I don't really want to go find a perfect one because I mean I have plenty of charts to show you that, but I think if you go to chart teacher page, you will see examples there. But either way, so I'm going to use the highlighters to indicate every single little, psi, SC, AR, ST, and so on. Okay, so first thing first, we all know this is a spring. Okay, why? It's the lowest part of a joint, a chart where price comes all the way down, then goes back up. Okay, this might be your test area. As you know, this is also what we call a breaker. I don't know if I've never really discussed it yet, but this is what we call a breaker entry. Okay. It's click a minute. Okay. So it's another way of what we call an order block candle, but it's reversed. Okay. So based on price breaks through and then you try to reverse to come back down, that's basically how you enter into the breaker candle. That is not, I don't really use them anymore because I changed the way I mark up, but it's still reliable. Okay. It's still reliable entry, but that would have been an entry for your spring test. Okay. But that's just what we call a spring. This area is what we call a spring. This can be known as your secondary test in phase A, because you know you have a selling climax. So here will be preliminary support, selling climax. You can see that volume indication. This also goes with volume as well when you read the article. Basically, the selling climax, when you have a huge selling climax, then price just, you see that huge volume indication right there, major selling volume, the price just diminishes right after, then goes back up, right? So of course you have an AR, but like I said, a perfect Wyckoff would technically have come down here as a secondary test, which is that right there. This would come up here to show an indication of break of structure to the upside. Okay. So basically, if it was a complete Wyckoff, you would see price go above this, which means the automatic rally, which means this will go all the way from here all the way to up there. All right. And then it's going to come back down to make that ST, which will be like right under the selling climax. So right there, and then it doesn't have to come all the way back up. It does not. It can just come like right there. So like right up there, you know, where there's like a little resistance zone, and then go down to make it spring. That's just one example. But this is incomplete Wyckoff. But when you get better at actually noticing Wyckoff, Wyckoff, whichever you want to call it, you will see that price. You're gonna know what to take your profits on in complete Wyckoff. You're gonna know what to take your profits on complete Wyckoff. Okay, so when you actually learn to find them, then you will see. Because the thing is, if this was complete, my target would actually be 11, which is all the way up there. So let's say that was your size, selling climax. This is nothing. Then you come down to make that little okay. Let's say this was your side, selling climax. This be your automatic rally. This can't be a secondary, but like I said, nothing came up there. So regardless, there is no complete Wyckoff. Okay, but it's just incomplete. Your target is at that preliminary support. All right, which is the PS right there. Okay, as y'all can see right there, that is your target. But normally your target's supposed to be at that very top high. But if you're selling, then the very last low. So yeah, I mean, let me go ahead and box this out real quick to show you the zone that we are looking at. So it should be just about right there. Let me take out this and let me take out this, make it white, and then occupancy. So yeah, we have that there. Let me go ahead and get rid of these lines. But yeah, like I said, it's incomplete. But when you start learning how to actually see this in terms of charting, you will see that it actually shows you exactly where direction is going. Especially if you get it correctly, then you will see the correct direction where price is moving. So like I said, this is incomplete Wyckoff. It's not something I would normally take unless I really when it's a hedge or something, but it's not my biggest thing I would take. So like I said, secondary test, selling climax, secondary test again, because you want to have at least 2 secondary tests. You can have just one, but it's your selling climax. It's your first secondary test. That's your second one. Because if I go to like the 30-minute, you will see that differences in rejection. So that would be your second secondary test right there. Let me go ahead and make a highlighter there for that real quick. So yeah, so that's your secondary test as well. So you need at least 2. You don't need 2, but you can just have 1 or 2. Just really depends on you. Like I said, accumulation is the reverse of distribution. Okay, so it's going to be the complete exact thing. So side, BC, AR, secondary test. It's just reversed. And except we use UT, which basically stands for up thrust after distribution. But that's UTAG. Okay, so that's schematic 1. This is schematic 2. There's 4 formations, like those little pictures that y'all keep seeing in the back of my wall in my room. Over there, I should have more right here too. It's just Wyckoff all in my room. I should have more down there too. Like I said, I'm extremely fluent in Wyckoff. that's really how I truly trade. And like I said, it gets a lot deeper than this little article. So that's when y'all say, even though when I teach y'all support and resistance zones, breakup structure, it's a lot more than just that little, that little stuff that I do. Okay, because I primarily focus on Wyckoff because I think it's how the market really moves. It moves based on structure, of course. Can you not hear me? Do you not hear me? Can y'all hear me? Y'all hear me perfectly fine, right? Because it seemed like this one does not. Okay. Okay, so but strictly for past, can you hear me yet? Because everyone else can hear me. But while I wait for you to respond, just let me know. Yeah, so like I said, incomplete Wyckoff, or rather, this is what I really focus on, is what we call Wyckoff. So if you become fluent in it, then great. But I also trade institutionally. That's another one, which is bank candle. I'm sorry, bank candles, like big entries. That's another thing I use. So it's just, I don't use just one thing, So yeah. Either way. So as we can see, that's our spring. This could be your test, or this could be your test, whichever is your entry, depending on, because like I said, if you go to the lower time frames, okay, let me see. Let me text pause real quick. Leaving the chart. Yeah, I know, I saw. I don't know. Try leaving the Zoom, I'll let you back in. And then, because I have no idea. Okay, yeah, I'm waiting for you to come back in. Just hurry up though. So while we're waiting for him or her, whichever it is, like I said, try to get a grip on using Wyckoff. This is not something I'm really going to teach in general, because it's hard to teach. I'm going to tell you that right now. It's really hard to get fluent in. This is the thing that took me the longest to learn. Okay. And let's see, is that better? Does that work? Okay, let me see. Is he in yet? Can you hear me now? Okay, great. So yeah, okay, let's just scroll what I said in the beginning. Let's go back to what I was saying. So yeah, this is what we have to start spring, okay? Depending on how you enter, if you go to lower time frame, like I told you, lower time frames for me are used for entries. I don't know if I've told y'all, have I taught y'all how to use time frame confluences? Let me see if I told y'all. No, I don't think I have. I don't think I taught y'all time frame confluences, but basically, when you're using time frame confluences, basically, or rather time frame changing, you just want to start at the daily. Okay, so the daily is going to tell you your big picture. Your weekly will tell you your big picture. Your monthly will tell you your big picture. I hardly ever look at the monthly unless I find a what we call a smart money entry. If I do, then great. If not, whatever. So you would technically start the monthly. You don't have to, but I would usually advise starting the weekly, because you can get a bigger picture of the weekly depending on what stock you're using or you're looking at, or forex pair, whichever you're looking at. So if you look at the weekly, you see the structure, or you see where the trend is really going. Yeah, and then you will see where trend is really going, and you start getting to daily. Daily will show you that like weekly aspect of where price can possibly go. And then after that, you will move down to maybe like the 4 hour, the 6 hour, depending on what kind of trading view you have. I have Trading View Pro, okay, because I need every single time frame. But let's say the basics, I think it's going to give you the 1 hour, the 4 hour, the 2 hour. I don't know if it gives you the 3 hour or not, but you also get the 1 minute, the 5 minute, the 15, 30 minute, and the 50 minute. I think, I don't know, whatever. So if you have the basics, you basically go from the daily to the 4 hour. So the 4 hour is going to be a lot more better to look at. So depending on what you're looking at, it will tell you. So if you go to the 4 hour here, you probably won't notice any particular Wyckoff schematic. I can see it. I mean, I can see it personally, but as a beginner, you will not be able to see it at all unless you're so amazing, whatever it is, but like I said, you can't see any type of white off. If you go to the 10 hour, you can't see any of that kind of stuff, you know what I'm saying? So that's why you always want to change your time frames. Okay. So when you start changing your time frames, you're gonna start seeing better entries, more stuff, all that kind of stuff, all right? So if you go to the 40-minute, it's probably gonna look a lot better. Like this looks prettier, but it's still incomplete. There is no automatic ride to the upside. That's usually what I look for to make it extremely complete, like something capturing that automatic ride to show that breakup structure to the upside. I mean, of course, we're gonna have that breakup structure again down there, but you will see as a fake out. Well, is this schematic number 2? Okay. Yeah, you will see that as a fake out in bearish zones. Like but as you get better in it, that's why you usually want to wait for phase D before you enter. Because you wait for phase C and you try to enter off that test, you can mess yourself up because one, it can be a complete whack off. You won't really know until phase D. And then, for example, you can see a last point of support, which is LPS or a bullish up thrust or whatever it is, right? But that sign of strength can completely become invalid to the point that it just sells off. So understanding every single part of Wyckoff is extremely important if you want to use it, because if you mess up once, you're gonna mess up the whole trade. Okay, so that's why you want to be really patient when you're charting in general. You want to be very patient, all right? So as you become more patient, then you can move to Wyckoff and all that kind of stuff. This is something I would usually advise, that if you become a patient trader or a patient person who marks up, then move to Wyckoff. If not, if you still feel like you have a lot of emotions, I would say just stick with learning how to use your support and resistance zones, use your breaker structure, enter based on volume zones and like all that kind of stuff, breaker structure, right? But when you get better, you can start using Wyckoff. But first, you have to actually learn institutional candles, which I think I'm going to show you that on week 4. I'm not going to demonstrate, but I'll show you it in week 4. I think I'll show you today as well, but I won't demonstrate it, but I'll show you. Yeah. So like I said, and then of course you have your next test area, of course. So as you can see, that little support area, which acts as support and resistance zone. So if I added a horizontal line, you're going to see how that test up there acts as that little, but of course, this would be your selling climax. So wherever you have your selling climax, where you're gonna have your line. So if I added directly under that line, I mean, it's kind of still valid as a test area. As you know, it just didn't hit it perfectly, but it did hit this area where that price rejected twice. So, or if you zoom out, you can see up there that price been rejecting. So valid zone, valid zone. Let me see what else. So yeah, that could be another entry for you. Then you take it up to the preliminary support for 820. From 6 to 8 in the money is a lot of money. Okay, like I said, learn to control your risk, learn to find your entries, learn to study your stop loss. That is a great trade. Okay, you can get more trades in from like, I think it's gonna be like down there, but technically your next target is supposed to be up here at the automatic arrival. Then price comes back down and retests this area and goes back up. But like I said, it's incomplete. But since this is incomplete, I knew where to take my profit, and which is exactly right there. All right, I saw that first jump to the selling climax, but I didn't get no automatic rally. But the thing is, like, people who don't understand the formation of what we call Wyckoff will try to buy back in. Well, if you understand volume, yeah, they will try to buy back in here. Because one thing I'm going to tell you is volume appears very low around this area. It seems pretty low around here. So I wouldn't be surprised if someone got faked out here based off saying, okay, volume looks diminished, I'm going to continue to buy around here. But the thing is, it's incomplete, which means your target should have been 824, 825, whichever it is, and you sell it off. So, but speaking of the homework, if you did the homework, I haven't finished grading everyone's. I have just a couple more to do. I don't think I should be going there. But yeah. So like I said, if you did the homework and you told me it was bearish until you went to the 1 hour, you were correct. I mean, like I said, I already told you all your answers. I showed you the correct chart. I said it was bullish until anything else happened. I mean, as of right now, it's now bearish due to this break of structure right there, as y'all can see right there. So yeah, that break of structure. So we are now in the bearish zone. Price can come back up, retest off the breaker, or retest off this zone. We don't know. You know, you got to find your entry, go to lower time frames, all that kind of stuff. But yeah, that is what we call a complete wipe off. That's just an example of it. But like I said, I'm not going to use too much on this one because there's a lot of things that I didn't even demonstrate that you got to really know here. And the price cycle, you know, this is something I want you to read first. I want you to memorize the terms, the rules, the approach to the market. You don't gotta, the guy doesn't matter. It doesn't matter who he is. But I do want you to read through this if you decide you want to. Like I said, if you want to get better, do what you got to do. Like, I'm not going to tell you, go do this because, like I said, I only got here because I did it. You know, I did the part I was supposed to do. So, like I said, if you want to learn it, come to me. No. Don't even come to me. Go to whoever you want. But what I'm saying is actually try to actually read this stuff. And this is on YouTube as well. But like I said, I don't get my information off YouTube, but I do believe that if you go to YouTube, it should be there. I don't really know, but I'm gonna have to, let me confirm real quick. But like I said, I don't really watch YouTube videos. I look for specific teachers that I go to, their courses, or I reach out to them. I've never really, yeah, I've only had like a, whatever mentor, but we'll see. Let's see. So if you go Wyckoff, we just type in Wyckoff trading method, you will see a bunch of videos here. Like I said, I never really watched any single one of them, so I don't know if they're good. Because I have the actual course of Wyckoff, that's what I'm saying. But they look good, you know. But you're gonna start seeing like there's a lot of information on them. Their videos tend to be really long, like they're all like about an hour, 2 hours, 3 hours. The one in my course up to 4 hours, you know. So like I said, if you really want to learn it, get to it, start watching these videos because there's a lot of information on them. It's just they're really long and excessive and very boring. I'll tell you that. No. Well, for Alexis, for your question, no and yes. I know you're asking. I know exactly what you're asking, but no, it's not. Like I know exactly what you're asking, but if you, okay, when you said head and shoulders, you're right. But the thing is, you see how this is supposed to be your shoulder, or your inverse head and shoulder. So you're supposed to have that shoulder right there, then your head, then your shoulder right there, then take off. That's false. So in terms of bank trading, right? This is what we call the fake out. Okay, you retail traders, or rather retail traders in general, will try to enter their buys right here, but the fake out occurs for the spring, which is a major sell-off, which is what happens here. So you have your little, I don't know, your little shoulder, your little head, then maybe your shoulder here, price technically takes off. We should see that little takeoff right there, right? And then price goes up, then sells off, and then takes out the people who are buying. Okay, then price comes up, test, enters your actual entries over here. Then you go to the bullish side. So like I said, these are what we call bank traders, or that's what I taught. That's what I was taught. But institutional traders, bank traders, whatever they call them. We just don't trade retail. We don't trade chart patterns. No, we do not enter off the spring. That spring's to help you figure out whether or not it's schematic number 1 or 2. Okay. If it is not schematic, if it's schematic number 1, you will have a spring. If it's schematic number 2, you will not have a spring. Number 2 is so much harder to see. Like I said, it is very, very hard. Let me see if I can find the perfect example of Let me see. Actually, you know what? Here, let me stop sharing my screen. Just really, oh, there's 9 people in the waiting room. Okay. 9 people. Okay, yeah. Let's see. Let me stop sharing my screen really quick. I'm gonna pop up this perfect example of a perfect schematic of a Wyckoff. Let me stop sharing my screen. I gotta go find it real quickly. How do I stop sharing my screen real quick? Okay, stop share. Okay. Now let me go ahead and find that thing for you just very quickly. Let's see if I can find it. All right, where are they? Where is it? Where is it? Where is it? Where is it? No, let me look for RCV, RCV, RCV. Okay. Let me make the screen bigger. Okay, now let me share my screen real quick. Let me click admit all and then share my screen. Let me share my Telegram. Okay, so y'all can see this Telegram, or rather y'all can see this public chat that's here. Let's see, let me, oh no, y'all can't see it yet. Okay, share. Okay, y'all should be able to see now. So y'all can see this. Let's take a really quick look. Let me click admit all. And then where is the chat button? Great. Can y'all see the screen? Just need like one person to see it. Seems like y'all can see it. Okay, great, cool. Yeah. So, like I told y'all, this is a perfect example of not these, but I mean, this is also a perfect example of one, but they are absolutely better traders than I am by far, and I mean it by far, but huge difference between me and them, like extremely vast difference. But this could be a perfect example. So remember I told you, technically from here to up there is a perfect example of automatic variety. I'm sorry, incomplete accumulation. Okay. So down here, you're probably gonna see that little preliminary support. Let me see if I can find it. So it's supposed to be an accumulation, it's supposed to be spring. Okay, this is your little spring down there. All right. No. Yeah, this is your spring area, but it's extremely lacking. Okay. And then you also have your little, probably your preliminary support, selling climax, secondary test again, then your spring, then this will be your spring test. As you can see, you can enter the candle. But the issue here is that, remember I told you about that automatic Riley? If you go to, oh, you can't see the screen. If you go to this right here, you want to see that secondary test kind of take out that automatic Riley, which it never really did. So it's incomplete, okay? But the thing is, where would you take your profit? Somewhere, I don't know why it came all the way up here. I can't necessarily say why, but this is the demand zone. So the thing is, it's not uncommon that it came all the way back up there, but my thing is I'm trying to see why. Okay, let's say you enter here, you took your profits here, that's one. Okay, price came back again, touch another entry right there, that's two. But okay, I know why it went up there, but I'm not gonna go over that. That's just a whole nother, like I said, there's a lot more to this, but I don't really want to go that deep into it because it's not gonna make any sense right now. But there's a reason what I told y'all. If you cannot identify every single phase of Wyckoff, you will mess up. So this is a prime example. This is a sign of strength. And I forgot what happened up there. I read on it, but there's a reason why it just took off. Okay. This might appear perfect, but it's not. It's definitely incomplete. But as you can see, price came all the way up there and then looks perfect and all that. And as you know, there was no break of structure right there to the downside. So we are still bullish. So price comes enters right there. We go back to the upside. You wouldn't re-enter here because, no, you would, because there's another break of structure. So the price came back over there. So you find your entry. There's a breaker, but breakers are another candle formation that we use. So if you learn about those, you can definitely enter right there. Like I said, so that'll be another breaker entry to the upside. Yeah, so that'll be that. Let me go ahead and click participant right there. So I'm gonna click admit. Okay, so yeah, let me see if I can find a perfect one where they're using like a perfect example of no, not right there. This, it's fractional distribution, so it's not really the best example as well. No, like perfect, pretty, gorgeous. Yes, this is it. This is it right here. An extremely gorgeous formation of what we call, because this, okay. So when you get extremely, this is for example, first of all, this is schematic number 2. Okay, it's not schematic number 1. There is no spring here. All right, but when you get a lot better at seeing it, you're gonna see distribution. I'm sorry, Wyckoff on Wyckoff. All right. So when you start seeing double, you're gonna start seeing, like I said, as you get better, you start noticing them. So as you can see, we have your secondary climax, automatic Riley, secondary test, that clearance. Okay, which shows that initial break of structure to the upside, all right? Then price comes down and it takes out structure again, all right? So that's your secondary test. This is your entry, what we call order blocks, order candles, Genesis candles, whatever you want to call it, all right? You can call it whatever you want. Yeah, so as you can see, this is also another Wyckoff, but this one has the spring. Selling climax, secondary test, preliminary support is up there, spring, your test entry is down there. I mean, technically it's really right there. To my knowledge, I would have been taken out of this trade because I would have saw that break of structure, had my stop loss at break even. But yeah, but I don't know. But either way, this is a perfect example of Wyckoff. Like I said, as you get better at it, it becomes easier, but that's just a nice, really gorgeous example. Yeah, this is it right here. That is your entry right there. Like I said, selling climax, automatic Riley, spring, then price comes up, take that automatic Riley, come back down, okay? But it is sign of strength up there. It has to look like it's sign of strength is basically reaccumulation, okay? And you also got to learn reaccumulation, redistribution, which is a whole nother breach. I do have a lot of I have a whole lot of stuff regarding this stuff, but yeah, same. This is reaccumulation. In other words, sign of strength, okay? And then sign of strength again. So basically, you find your entries again and again and again, okay? So perfect examples, like right there. Reaccumulation. I'm definitely not going over this right now. That's just a whole nother thing. But this perfect example of using fractional accumulation, like all that kind of stuff, you know. So like I said, this is something that really takes a lot of time to learn. So that's why I don't really want to go over it unless you reach out to learn it, then I will teach you it. But yeah, perfect examples of just perfect accumulation, distribution, all that kind of stuff. But those are just, you know, whatever it is. But yeah, let me go ahead and share my screen back to the charts. And then we are going to go ahead and go over entries and confluences since we are done with Wyckoff. So yeah, let's go ahead and look at that. Let me kind of just get this sorted out. Okay, so now share desktop number 2, share. So yeah, like I said, you want to learn the videos. I mean, you want to learn Wyckoff. It's all over YouTube. I don't use any of these videos. I just use whatever that is. So yeah, now we are going to take a look at, you know what, let's just look at this stuff. I don't know what it is, but we're going to look at it. Okay, so what we have here is that we can see that we are entering a bearish market, or rather INTC is bearish, okay, because of the fact that there's a break of structure right there, okay? So matter of fact, let me get this out of the way. Let me just kind of move this over. So we're gonna have just one chart. All right. All right. Let's take a look at that. Take a back test real quick. So volumes, entries, confluences, trend, all that kind of stuff, all right? Okay. All right. Okay. I already see it. I'm just trying to figure out how to demonstrate it real quickly. Just give me a second. Okay, I'll go with that. All right. Let's back test. So entries, confirmations, all that kind of stuff. All right, so we have INTC, which is Intel Corporations. Basically, right now, what we're looking at is that we can see we are in a bullish market. Okay, so what did I tell you? First thing first is I want to demonstrate candles. Okay, what are candles? They are entries. All right. Remember what I told you? I'm not going to necessarily demonstrate the aspect of it, but this candle takes out this high, so it's valid. It's a valid candle. What makes the candle valid is simply the fact that this take any highs, to take any lows. So basically, it's also an engulf candle. So your stop loss would be at the end of the candle. Okay, so basically, you try to put a percentage based off in your options. I mean, actually, we're not gonna go with that. Just that would be your entry. Okay. This would be your entry, and then let's see this. That would be your 50% of an entry, because you're supposed to enter either at the candle, the wick, or the entry. All right. So you have two possible entries here. So when I'm going to talk about contracts or anything that we're going to talk about entries here. As you can see, there's a breaker structure upside. So technically, we are bullish until we see something differently. But let me go ahead and play this real quick. We're not in the trade right now, okay? We're just looking at baseball price dealing. So technically, we are in a real lifetime, which means that we are looking at price from this particular area. We can also see price fail to make new highs, which means that we want to be careful because it could become a bearish market. But right now, we are not in the trade. Let me take a look at the volume here. So you can see volume is kind of increasing, but we're gonna wait. Like I said, this isn't it's also what we call an engulf candle, but the issue is, did it take out any highs? Did it take any lows? No. So we would not use this as an entry. In other words, you don't want to enter right there. Okay, so don't use that. That is not a valid entry. This is a valid entry. This is not a valid entry. Okay, and when you're selling, it's obviously gonna be. That's going to be a nice example of using like a selling entry. That's also another example, but this is also not valid because they're not taking any lows, they're not break structure, nothing. They're not grab liquidity. Well, okay. Yes, this is a valid candle, but my thing is we are buying. Okay, remember, break a structure to the upside with this candle, which is why when price came all the way down there and activated, you would not look to sell because we are not in a bearish market. Okay, so don't try to do that. Don't stick with the trend, stick with market structure. And as you continue to stick with market structure, then you will learn that you make less mistakes and all that kind of stuff. So you are still bullish as long as you remain above this. As long as you remain above 59, you're still bullish. But technically, since this is our new entry, we want to stay price above here. Okay. So right now we're focused on entries. What else am I focusing on? Volume, entries, trend, market structure. So market structure is up. Our trend is obviously up. Our entries up. Breaker structure is up. Okay. So what else are we looking for? What else confirmation? Right now we don't have any confirmation to whether or not we want to buy from where we are. Okay. So what we could do, we just keep watching the market. Okay, because we have no reason to buy in right now. So let me get this a little slower. So we want to wait for something to happen. As you can see, nothing's happening just yet. I don't have any reasons to like this is also another engulf candle. Oh, mitigation is another thing, but like I said, there's a lot to learn, but why would this be valid even though it didn't break structure again? But the thing is, in this mini structure, if I take you to the 10-minute time frame, okay, if I take it to the 10-minute time frame and I move my entry a little bit lower, you're gonna see how price hit this mitigation entry. It didn't hit the body, but it hit the wick. Okay, so I make this up there. You're gonna see how that price came over, okay? And then you're also gonna see how price goes to the upside and breaks this structure. So there's higher time frame structure, there's lower time frame structure. The lower time frame, higher time frame structure is a whole different complex of using market structure. Like what I taught y'all last week is basically just structure on using higher time frames. Because even though a lot of y'all actually get it now, you don't get it yet. Okay, I'm gonna tell you, you don't get it just yet. Because once you start seeing, you're gonna be like, I thought price broke structure. How come it didn't go up? It's a price broke structure in the lower time frame, which is why I continue selling. So it gets a little more complicated than just using the 4 hour to 1 hour. So I believe that we were looking at the 30-minute. Okay, and then you're gonna be like, I would tell y'all, oh, price did not break structure or go to the upside, so there's no reason for us to enter. But if you go to the 10-minute time frame, you go to the lower time frame, you're gonna see how price comes up here, breaks that structure. Okay, because if you look here, there are many structures to show where price can become bearish again. So I'm gonna use the highlighter. So if you take a look at this candle, price comes down, makes a new high. So that's technically the little significant structure, as well as this. Price comes down, makes a rejection. Okay, so price comes up, rejects, breaks structure. Price comes up, rejects, breaks structure. So technically, the market becomes bearish right there on the lower time frame. On the higher time frames, we are still bullish. But if you want to scalp, use smaller entries, day trades, all that kind of stuff, then this is a perfect example, which is exactly why you would enter up here. The 50% of that is exactly why I would actually have sold. Okay, and then you will sell to your buying entry, which is down there or up there, depending whichever you chose. So I think probably in the 5-minute time frame, you will see, because we do have what we call reverse engulf candles. So either use the 50 or you use the let me go to the 10-minute real quick. It's too much. Okay, there we go. So using the 50 of the reverse engulf candle, you will see how price exactly hits up there, then takes off. Okay, so if you want to scalp and day trade, this would be an okay entry. Because why? There's a break of structure right there. All right, break of structure. So we had a break of structure right there to the downside for mini scalps, whatever you want to call it. So as you can see, we call it reverse engulf candles. So as you can see, price enters right there. You can either enter the body or the 50. But when the candle is extremely big, I always use what we call the 50. Okay, the 50% of the candle is what I want to use. Okay, because I don't like using I prefer risking correctly, and I don't really over leverage all that kind of stuff, because it's not a buy get rich quick scheme. So just risk correctly, enter correctly, all that kind of stuff. Yeah. So technically this would be entry number 1, entry number 2, but this candle's way too big. I wouldn't even bother entering there. So I enter right there, which is why this will be your entry. Okay. Where do we sell it off to? We'll sell off to the next downside. So where it's technically right there. Like this is a good day trade. Well, I don't think it's a day trade. It's actually, yeah, I mean, it's relatively a good day trade. Maybe a 2-day hold, quick scalp, like a 2-day hold. But this would technically be your take profit target. I mean, it's really down there. But the thing is, since we know we're buying, we cannot hold it all the way down there. Because we have an entry up there. We should probably take our profits right there. Let me go back to the 30-minute really quickly. Because as you can see with the candle right there, there's a mini break of structure up here, which is why this will also be a balance zone. That's the body, just the 50. Okay. Like I said, as you get better, you're gonna start seeing that mini break of structure right there, cost right there, price comes up, goes all the way down. There's a break of structure up there. So which is why we had that little idea why this was a valid candle. So as you can see, price respected, it went back up. I don't remember if price, we'll see. But yeah, let's go ahead and let it play out really quickly to see how that turns out, because I don't remember if price went back up to the downside or not. But this is actually my preference of entry, not really up there. So if you want to enter up there, that's fine. Let me take a look at the volume. Volume is relatively low, so I mean, I would enter, you know, volume is still low. Mitigation is my first confluence. Break of structure is number 2. Overall uptrend is number 3. If you add a trend line, that's probably 4. Low volume near entry is 5. Let me see if I can see anything else. Mitigation was 1. No. Let me tell you something. Since we did not get a new higher high, that's a sign of weakness. That's 1 to the bear side. We broke a structure is 2. What is 4 minus 2? What? No. That 5. So what's 5 minus 2 is 3. So technically, I only have 3 indications of a confirmation, and I need at least 3. So technically, I'll take the trade still. All right. So but me, like I said, I prefer smaller stop losses, smaller risk, and all that kind of stuff. So even though our entries on the 30-minute time frame on this particular candle, I would probably miss it. But from what I'm teaching y'all, you're supposed to enter the body, the wick, or the 50. I always tend to use the 50 to candles big for me because I don't care about missing trades. Okay, like me personally, I'll miss a trade. I don't care, but I rather miss a trade than lose a trade. Okay, so that would be my entry. Does it come back down there? I don't know, but I don't remember. I don't know. But as you can see, price is shooting up from that entry on the body. Like I said, I don't know if price comes down or not. And it did. So now we are in the trade. Volume is kind of high. So now I want to ask myself, do I want to stand in trade or not? Volume is very high. No, it's okay. No, I'll stay in the trade for now. Yeah, I'll stay in the trade for now until I see something different. Um, I'm out of the trade. All right, so I closed the trade at a loss because that's too much momentum. You can see how the selling volume is gradually rising. So right now, where I told you there's possibility where it's become a bearish market. So right now, I'm getting out of trade, barely in a loss because that would have been my entry right there, right, just right there. Okay, so but that's just too much selling pressure. So that's how I use volume to indicate, since I just entered a trade, how do I know when I want to get out? Volume. Me personally, that's just me personally. Okay, but that's too much selling power for me. So just go back up. No idea, but we're gonna see. So yeah, it might go back up, it might not, I don't know. And as you can see, you're still in the trade because your stop loss is like right there. But like I said, I'm playing it safe. I got out of the trade with a very small loss. But does it go back up? We don't know. It may not. Ah. Just like that. just like that. But remember this body, because this is still valid. This area is still valid regardless. If I make it tighter and we're just using the body, we can actually enter off this candle. Okay. However, too much selling pressure right there, we got to fake out. So if you're still in the trade, you might come back in profit and be like, oh, it's going back up. I'm going to remain in the trade. But in reality, no, you need to understand your market structure, you need to understand concept. Right now, we are definitely in a bearish market in terms of this aspect of where price is, this rectangle formation, we are in a bearish aspect. Okay. So get out of the trade. Don't force it, don't do any of that stuff. But when you see stuff like this, you have to configure it to your point of interest. Okay. So point of interest basically means that this is where I would like to see price react. Okay. So if price rejects and it enters, then it breaks this structure. Then we start looking for entries to the upside. Okay. Like I said, it gets more complicated. This like that very first 2 days that I taught y'all, it seems simple, but it's not. Because when you really start looking into a chart, you really got to start saying, okay, what's valid, what's not valid, where's white color, where's this, where's that, and then you just got to start piecing it all together. Like right now, I'm not recording this because of the fact that there's still a lot of information that you guys are missing that I'm not pointing out because of the fact that there's like a structure of what you're supposed to teach, okay? And I can't really teach that in span of 4 weeks unless I taught y'all like Monday, Tuesday, Wednesday, Thursday, and Friday, breaking every single down to the T-bone. But that's what I'm saying. Like, if you really want to go down and break this down, then you just come to me. But anyways, yeah, so that would be your indication of entry, number 1. Okay. So this should be your point of interest. We saw a nice rejection. We also have a 50. Okay. So that'll be your 50 year entry. I don't know if it activated or not. Probably not. No. But we had a pretty nice rejection to the upside, but that's just your point of interest. So when you get your point of interest, go to the lower time frames, maybe the 2-minute, maybe, and then you want to see a break of structure to the upside. So we need to see price come above here. If it doesn't, we're not entering just yet. Okay. Because right now we're still in a bearish market. So we want to see price come up there and make it a bullish market. Because remember, we are still overall bearish until price comes under 59.47. I'm sorry, bullish. So as right now, we are still monitoring. What time frame was on? Yeah, we're still monitoring off this entry. So we got our first entry in. Highlighter right there. Let's see, show so. So yeah, that's our highlighter right there. Let's let it play out. What's gonna happen? I don't know. Like I said, no break of structure. We're going back down. So therefore, we're still not in a trade. So being patient is what's gonna help you. Because like I said, at one point I used to be impatient, and I would just mess up because I just got impatient. Patience comes from just trial and error, and you start seeing the same crap again. So eventually you just start noticing all of it. We're now in a bearish market. Price broke structure. So I start looking for sells. When I see that break of structure, this technically is my entry, but where am I taking it to? Okay, price already broke that structure. Is that a swing low? That might be good to sell. What's the right between high volume and low? What do you mean by that? And remember what I told you? If you can't see a setup, don't bother even. I mean, I would sell here, but the thing is, if you don't have a target zone, don't bother selling. Because right now I can't find a target zone to where I want to sell this to, because one, it already took this target. So, but if I go back to the 2-minute, maybe, and you understand that you're in a bearish market, you can see how you can enter off here. That would be a candle because it took that little mini structure. So price come back up, enters off the body, and then sells down to that zone right there. So you got to go from like 59, 58 to wherever. I don't know if that's really in the money or not, but it's a quick buck, quick day trade, couple of contracts in and out. But we're in a bearish market. I just can't see where I would want to buy at, okay? Like I said, but you can see how I'm getting out the trade. I'm monitoring the trade. I'm slightly predicting price, figuring out whether or not I want to enter or not. But right now, I can't see any reason to sell. So we're just gonna wait for price to go back to the upside. So basically, if you can't see any reason to sell, leave the stock alone. Come back maybe a day, an hour later, 2 days later, wait for some type of structured breakthrough. Okay. Am I seeing Wyckoff here? Okay. Let me delete this real quick. This is incomplete. What I'm about to show you is incomplete. But like I told you, as you get better at, actually, let me just erase all this crap. As you get better at noticing them, you will start seeing them, but I can see an incomplete formation of Wyckoff. Okay. Very incomplete, but it's doable. Okay, it's doable. I just need price to break structure here. Like I need this to come up to the upside. If it does, because this is spring. Secondary test, selling climax, secondary test again, side, all that kind of. There's no automatic right now. There's nothing here. Okay. So but my price target will probably be at the supply zone. Okay. So as you can see, we have a little supply zone, like just a little under here. I don't care, right there. All right, so that's our supply zone. But the question is, since we are now bearish, no, let's just see price breaks target. If price goes to the upside, it hasn't yet, so yeah, like I said, finding your perfect entries take time. You don't just gotta enter randomly. If I was in retail, yeah, I can find places to sell, but that's not what I'm trying to do right now. I'm trying to show you how I enter specifically, but 1, 2, 3. Okay, I like this. So as price starts going down and down again and creating new springs, 1, 2, 3, 4. Incomplete but doable. Incomplete but very doable. Like I said, I'm go to 5 minute. Go to 10 minute. Go to 5 minute. So do you see how much time I'm spending just trying to find these entries or figure out whether it's a breakout structure or not? It takes time, but like I said, if I think I'm spending too much time on a chart, I leave. I go to another pair. But right now I'm trying to show you how you can find an entry based off sticking to one particular chart. But if I can see a breakout structure here, up here, too much selling. First of all, there's too much selling pressure, but if I can see a breakout structure here, then we can start looking for buys. Because right now I'm not looking for sells, but I don't see where I can sell to because I can't see anywhere to sell to down here. But buying volume is definitely kind of picking up. Well, we got our first breakout structure. You know what? Bigger structure right there. Go to 1 minute. Price breaks over here. Market's going back up. We still don't have any bullish momentum yet, but I think price might still go and keep going back down. Okay, price held. Okay, so now we have a 50% gap. So technically you want to kind of like pay attention here. This is a mitigation candle. Okay. I'm gonna take the 50. I'm gonna take the body. All right. So we have breaker. Okay. So that's the breaker. If you go to the 5 minute, this is what we have. We have another breaker here. And yeah, we just have a bunch of breakers. So I'm just let it play out. So it hit the 50, the breaker structure. It hit the 50, it's rejecting. Is there someone trying to come through the thing? Okay, it's coming a little lower. That's what we want. That's what I want. That's your wick of a breaker. So if you want to enter right there, then whatever. I mean, it won't be too bad because the volume is quite low. Like I said, we have a breaker structure, so we do have a reason to buy, but I'm not buying just quite yet. Not yet. Not yet. Let me see this. Yeah, I think I'll enter. Okay. I think I would enter here. It's not bad. It's not terrible. It's not a bad entry. There's quite some selling pressure, but I think this can do. But this is where, so when I enter a trade, I start paying attention to the 1 minute time frame. Okay, the 1 minute time frame is going to tell me stuff like whether or not price is about to break structure and all that kind of stuff. So as you can see, price is definitely bullish until it comes lower than 58. Okay, so we're still at 58 right now. 58 60. So as long as it's not go over 58.17, we are still bullish. So technically, if your target is all the way at, if your target is all the way at, if your target is all the way at 63, that's pretty much out of the money. So technically, you can actually enter here and your stop loss can be all the way down there. But let's let it play out. I'm gonna go a little faster. I'm in the trade, by the way. We have our first break of structure to the upside. There we go. As you know, I'm in the trade right now. We're getting the mini accumulation. We have our spring test. It's not following through, but sometimes it tests the spring again, but we'll see. But it's looking good so far. Volume is low, relatively low. We're still in the trade. Overall, it's doing quite nice, but I don't like how it's coming to the downside like that. Volume's picking up, but it's in major consolidation. This was our entry, okay? This was our entry, right there. But I needed to like fully break this structure, because if it broke the structure completely, I'll just get off my phone. But this entry was made on March 5th. It's currently still March 5th, so technically I'm monitoring. If you're a day trader or you really like pay attention to charts a lot, then technically you be like really focusing on this screen. Focusing. I don't really focus like that, but yeah. So let's just let it play out. Like I said, your stop loss is all the way down there. So we're just gonna let it play out, see what it does. Like this is a major consolidation zone, you know, but we'll see. It goes up, it goes down. I don't know. It's coming back to entry right now. It's dancing around entry. It's still shooting up. We're still in the trade. We're almost to where I want price to take to really get out of there. That's what I like to see. There we go. Almost there. Almost there. There we go. Stop loss at break even. That's what I like to see. Like I said, when I back test, I do not remember what I see in the future. So this is exactly what I want to see. So we're still in the trade. We are in profit. We're in money. We're in the money. We're in the zone. Price is flying. There you go. So do y'all see how I'm taking my time to find all these tiny entries, using these time frames, going to the 1 minute time frame, 5 minute, all that kind of stuff, right? And I'm just literally just trying to piece it all together. I'm telling you, you got to find your breakup structure, you got to find your confirmations, all that kind of stuff. It takes time, okay? The 1 minute time frame just tells me, it doesn't tell me anything. It just, they all tell me the same thing, all right? They all tell me the same thing. It's just, I use these time frames for, I use the lower time frame specifically to look for entries, okay? So if you go back to the 1 minute time frame, that's where I got my entry from. No, yeah, that's where I got my entry from because I used the breaker. All right, so this breaker right there is how I know. I think I got off the 5 minute or the 3 minute. No, was it 2 minute? Yeah, so this is the entry I had. This is the where I took my entry from. So as y'all can see, I took my entry from there. Your stop loss is where the structure is because it's the 1 minute time frame. And as you can see, price jumps off. So I would just say that the 1 minute, the 2 minute, the 5 minute is kind of just used for entries. Everything else, do whatever you want with it. You know, like I said, like as you start to look at charts yourself, you might all have your own reasons for why I use the 1 minute, the 2 minute. You know, so like I said, this is where I caught accumulation. This is where I caught the spring. Okay, did it hit the body? No, but it hit this. It definitely hit the wick of the entry, as y'all can see right there, barely grasped. So if you want us to enter at the test, you can. And then as y'all can see, you get all the way up there, you know, price come back up, fills a gap, fills 50% of the gap actually, which is why that breaker was right there. And then shoots back up. So the reason I highlighted this zone was because I noticed, so here you cannot see accumulation, but if you go to the 5 minute time frame, you will see an incomplete wipe-off schematic, which is why I had the area boxed out, because I could see 1, 2, 3, 4. That's what I need. Because to make an accumulation schematic number one, you need 4 drops. All right. And then you need that test, which is what happened right there. And you can see price is taking off. Where's my target? I'm swinging to 63. I don't remember why, but I don't know. I forgot why. Oh, there's a supply zone up there. There's a supply zone up there, which is why I'm going up the road. But let's take it to 15. Just let it run. You can find more entries, you can do whatever, but I don't know. As you can see, this is the end of the box of the accumulation, but I'm swinging to 63. Like I said, there's the 50% of entry. You can definitely enter because you can see how price broke structure, breakup structure again to 50. That's your entry again. Now you're going up back into the upside. But this was the end of accumulation. So if I take out of the 5 minute time frame, you're gonna see how I boxed this area. Price went up there, then sold off. Okay, so technically this is the end of the accumulation zone. But the reason I'm swinging to 60 is because demand zone and supply zone. All right. That's a whole nother story. That's actually, I'm gonna be honest with you. I don't know how to explain it. I don't. Like I'm gonna tell you, I'm gonna be honest with you. Right? I don't know how to explain the demand zones or the supply zones. There's gonna be things that he says, is there option to play, pause the stock chart? You can no, you can use it in the basic, but it allows you to use it in the daily time frame. So if you don't have the pro version, you can't use any time frame. You have the basics, you can use the daily only, which is why I mean I got the pro because I need every single time frame, you know. So yeah, but if you have the basics, you can always do daily time frame. Yeah. But yeah, that's that. Oopsie. So sorry, just water. Yeah. So that's your entry again. Near the entry, volume is quite diminished, so it's not too bad to enter. So that'll be your second entry if you do want to enter. Me, no, I'm not, because I like to just swing one position. What box? This big old box. This box for Julia. If you talk about that box, that's accumulation. That's what this is. Like I said, how do I explain? How did I get it? My eyes. I mean, no sarcasm intended. What I mean by my eyes is getting adjusted by seeing the chart again and again and again. And like I told you, you can watch the videos. That's not what's going to help you. What's going to help you is sitting at a chart and looking at the price again and again until you can find. So you take this picture. Oh, you see, I even have it right here, right there. Just like I said, I have a lot of these printed out all over my room. I don't even know if I have more. Like I told you, I have a whole bunch of it's just sitting in my cabin. It's just all over my room. Like I have this stuff memorized to the T-bone, okay? Like it's just all right there. Like I told you, if you really want to learn this stuff, you have work to do. You have a lot of work to do, actually. So I think it's the hardest one to learn, but like I said, that box area is what we call accumulation. That's how I got the box area. Like I told you, I didn't explain it because this is something your eyes have to get adjusted to, and the main point of this webinar isn't for accumulation. I'm sorry, Wyckoff, which is why I'm not really pointing it out, but that's what that box there is intended for. Like I said, you can print these out. Even I don't know if I'm going to show you my phone. It's my phone right here. That's my background. It has every single four for whatever. So basically, yeah, my life basically revolves around charts, So if you really sit there and you really want to learn it, then you're going to learn it. You know what I'm saying? If you want to learn, you're going to learn it. You just gotta, I'm not saying you have to do all this crap. You don't, but it's just something I do to help me to really just see it everywhere I go, especially in my room. My phone, my desktop computer, everything is just like off. You know what I'm saying? So yeah, we're still in the trade. That's the second entry. Maybe not. Whether price goes down or not, I'm still in the trade. But just like that, pretty, huh? That's your first zone. That's your first supply. Okay. Price Tuesday, you can definitely take profit right there, but I'm still swinging onto the upside. There you go. Like Viola, we are out of the trade. So we definitely took it from 58 all the way to 63. So like I said, you take your time, you find those perfect entries. Yep, yeah, a lot of bread right there. You got a hole, you take that time, find those perfect entries. Because the thing is, if you see me, Kelly, Jordan, Zay, Sire, whichever admins you see, you're gonna see that they send way more plays than me. Okay, the reason I do not send plays. Okay, let me tell you this right now. I'm sorry, let me not use language. I can send a lot of plays just saying, okay, I know price is going this way, so enter. I don't know what target you want to choose whatever you want, and you can make money that way, but I don't trade like that. Okay, I trade based off precise entries. So which means that if I do not have the intended entry that I want, I'm not sending the play out. Okay. For example, Visa. Let's not talk about Visa. Actually, you know what? Let's not talk about Visa. Actually, you know what? Let's discuss Visa really quickly. I will demonstrate. Okay. So okay, you know what? Since we just went over this, I'm gonna tell you. I'm gonna go ahead and show y'all Visa. Yeah, let's keep. Okay, you know what? Yeah. So okay, but let me explain what happened with Visa real quickly. We got the entry we wanted. Okay, we got the precise entry we wanted. However, they're out there be suspected for fraud. And don't get me wrong. Don't get me wrong here. Let me clear it off. So I don't want this anymore. So as you can see, price still kept flying through all the way up to the upside. I don't know if there's anything back there, but no, there's nothing up there. So yeah, that's all. But I do want to show you something on Visa that, yeah, we are definitely at 206.90. You know, so one thing I'm gonna tell you is, remember I told you I woke up late, right? So basically, I don't remember where I said that price went under. So I think we entered at 220 or 222. No, we entered here. Actually, no, we entered at 222. Actually, I don't care. Okay, but the thing is, we were all supposed to get out of the trade if it went under 219, which it did. So it crossed 219. So, but the issue was I didn't wake up until 10, which was, I mean, don't get me wrong, that's my fault. But that's one reason I always tell y'all that y'all should go out of your way to definitely learn. Because if you don't, if you're following someone else's play, for example, y'all following mine, and of course I take blame, whatever. But my thing is, if I'm oversleeping or you overslept or whatever, let's say I overslept, you over here trying to panic because you're like, Nez, what's Nez doing? Why is not telling us to sell? Blah 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 blah. Like the thing is, we were supposed to get out of this trade a long time ago. Like as soon as it crossed under 219, we were supposed to get out of the trade because I definitely overslept. I was up until 4 a.m. just marking up charts. You know, that's something I do almost every day. So like sometimes I go to sleep at 5 a.m., 6 a.m. Like I don't like waking up at 8 whatsoever. But I only do just to monitor the trades to see what's going on, especially when you're in my trade. Like the only time y'all really see me in the chat 8:38 prompt is that if I sign out a play. Any other than that, you probably will see me around 9 or 10. But yeah, so we're supposed to be out of the trade. I mean, even a stock alert app, I don't care. I overslept the alarm, so it didn't matter. So the thing is, regardless, I would just tell y'all where y'all should get out of the trade if it gets under. If it gets under there, y'all get out. If y'all don't, that's your fault. That's definitely your fault because I told you where to get out. But yeah, so yeah, so that's what happened. It broke structure. As you can see, we're definitely moving to the downside. It broke structure again here. Because this is the mini structure that we're looking at, right? So if we're looking at the 5-minute time frame, which is what this is, you can see this mini structure of how price broke structure again to the upside, but the overall structure was 208. But the thing is, I'm not going to hold the trade from 220 to 208 because that's just lack of sense. All right, so here to here was that full break of structure that side, right? So that's the first initial structure. Actually, doesn't matter. I think Visa's bearish. I don't think, I mean, they're being investigated, so they're being investigated. So while Kelly did mention news this, news that, did we not catch it? So let's say we were all up. We would definitely catch the put. Because the thing is, I'm pretty sure there's a breaker candle there. Okay. Let me see if I can find it. Yeah, this is a breaker candle. So price came directly up there. Let me go ahead and just kind of push that up because you're going to see how this candle kind of just pushes its way up and it breaks structure. All right. So when you go up there, you're going to see this little zone. Price did come up. Is that an institutional number? 2580, 2580, 2580. Let's see. You would miss the entry. We would miss it. But like I said, you see how price comes up almost taps, almost did it, does whatever. But if you use the zone, you would definitely enter the trade. And then as you can see, I keep telling y'all this, everything that happens, whether it's news or not, there's a reason for why you can get into the charts in the trade. So that's like you said, I don't believe in news. I don't know what the whole, cool, there was an investigation. I don't give a damn. Okay. My thing is, as soon as it broke that structure, I'll be looking to sell. And that would be my selling entry. Okay. So I would sell right there off that breaker. But the thing is, we would have missed the put regardless. Actually, no, I would have just said, I would have told you how to get in. Because looking here, the volume was relatively low. So do you think once it got right like that, all right, let's enter. I mean, it doesn't have to be perfect. Let's enter. Stocks is a lot different from Forex. So I'll tell you how to enter right there. Then we would be in some pretty nice profits, huh? Yeah. But that's how you can look at the chart overall. It's just that, like I said, I woke up late. I understood why it's so in terms of chart aspect, news aspect. I didn't even read it, so I just saw that they're being investigated. You know, like I said, I don't believe in news. I'm never going to believe in news. I think it's all prefixed. We are the minorities. In other words, we learn the information way later. You know what I'm saying? Because I think the charts are fixed in order to go based off news. So they're going to say that, oh, actually, we're not going to go over this. So yeah, but yeah. So that's what happened with Visa, and then I think I'm going to show you a quick thing regarding confirmation zones on, let me take it to 4 real quick on Apple. Because I did tell you I wanted to sell Apple when it got around 126. So it did sell off. So this candle, what I told you, if I just, this candle right there, break of structure, in other words, valid. Not only that, it barely hit this reverse. Oh no, this is it right there. So mitigation, okay. Break of structure, okay. This is how I trade, by the way, but I'm also going to demonstrate the retail aspect. Entry, okay, 50. Take profit, 116. Nice. Buy again, 115. Buy again, 114. Liquidity, break of structure. Get out of the money for sure. Out of the money. So if price comes under, out of the money, we ride it up, break of structure. This is definitely break of. This is why we're bearish. First of all, why we're bearish because of this. But yeah. So now let's go over confirmations, confluences, and all that kind of stuff. Okay. So retail aspect, you can just draw. Retail aspect, you can just draw a zone across and you can sell. You know what I'm saying? Since you know there's a break of structure here, you can sell. But my thing is, my issue with this is, do you see how retail has this big zone? AMD is still, let me kind of this up a bit. AMD's been bearish. My issue is it's not bullish until it crosses 86, first of all. You know, so even though we got out of trade and loss, AMD is still bearish until it crosses 87. So which means that you keep selling, you keep doing whatever. Is this a breaker here? This is a reverse breaker, which is why price sold up there. Like I told you, using bank trading versus retail will give you better entries, less drawdown, less losses, all that kind of stuff. Okay. So precise entries. But the thing is, you definitely will enter less trades. Like I told you, the goal is to trade less, first of all. So if you enter less trades, then that's good. But either way, back to Apple. Retail aspect. This is yellow zone. I'm gonna make it yellow real quick. Let's make it purple actually, just for anybody in case anyone's just needs so purple. That's the retail aspect. Okay. So y'all can see the retail aspect will be called a resistance area or support. This support, this is a resistance. All right. Since we understand that aspect, I mean, since this is what we learned from lesson 1, I don't really want to break it up right now. But from the bank candle situation, this is how we enter. So here is confirmation number 1. What's confirmation number 1 is that we are bearish, right? All right, that is confirmation number 1. Actually, let's see, 1 is bearish. All right, so where's my all right, so number 1 is that we are bearish. Okay. Number 2 is we have a breaker structure to the downside. Right. So she's right, occurred right there. Like retail traders, technically y'all would have entered first. I don't just had a really. It's a good trade from both sides. It's a good trade from both sides. I just think that there's no confirmations here other than the fact there's a breaker structure and resistance. That's it for me in my eyes. Okay. So that's why I'm just like, what's gonna tell me to enter other than the fact that there's a little resistance zones and a breaker structure, nothing else. And to me, how do I know that it's safe to enter? I don't. So the thing is, why would I enter? I wouldn't. You can, I wouldn't. You know what I'm saying? If you enter it, good for you, you know what I'm saying? But I need more confirmation than that, okay? So I have a breaker structure to the downside. I have a, what we call, I'm gonna say order block candle. Order block candle to the down, which creates, which causes breaker structure. All right, so let me make this a little bigger. Let's make it 20 maybe, yep. So number 3 is here. Number 2 is there. No. This is number 1. This is number 2. This is number 3. And then any mitigation, that kind of stuff. I think it was up there. Yeah, I think it was there was just mitigation as well. So that's the 4th. I think that's from the lower time frames. So we have number 4 is right there's mitigation. Technically, that's already 4 confirmations. Okay. So now where we're gonna enter, based off the order block, which is called OP. All right. So basically, you enter at the entry, the wick, or the 50. Okay. And remember, I told you that's the wick, that's the 50, that's the entry. So since this is quite a big candle, it's a 4-hour time frame. You can see how this candle basically from 126 all the way to roughly 127. I would take the 50. So no drawdown, perfect entry, sell off. We are in major profits actually. I will get out of the money because my target would be 116. So that's definitely out of the money. Bunch of cheap contracts, maybe not. Actually, Apple's not cheap right now. So yeah. Yeah. So that is definitely what we have here. So that is definitely how I would enter my trade, how I use confluences. You can also use, you can use some trend lines because if you probably just go like that. Or maybe up here, I don't know. So like right there, and you kind of make it tighter from right there. I don't know. You can just do whatever you want, you know what I'm saying? But like I said, I don't really use trend line. I was just only teaching y'all the basics in week 1 and 2. Remember I told you I don't really use trend lines and all that kind of stuff. But this is really how I actually trade. Is based off these like 4 rules, but every setup won't have the. So sometimes I use retail, sometimes I use wipe off, sometimes I use institutional trading, sometimes I use whatever I use, So since I know a variety of strategies, I can get multiple setups, but I think the best one for stocks is definitely retail. Because of course, if I take you out of forex pairs, actually I'm not gonna do that, but then you're gonna see like a lot more, all that kind of stuff. So yeah, but that is how you're gonna get your entries based off my style. Okay. But based off retail, I told you you only have two confirmation that you want at least three. In other words, you do not enter the trade. You know what I'm saying? So I mean, you can find this could be your zone, okay? And then you can have a break of structure. But the issue here is I can't see a third confirmation. Well, actually, okay. If you're using retail and you want to buy here, I'm sorry, sell, your buying volume is relatively low. So that's your third confirmation. So you can sell. Like I said, it just depends on you. Me, I just think using zones are just really risky, so I don't do it. But great example, perfect execution, all that kind of stuff. So yeah, it just depends on you. But confirmation or confluences, same thing. Confirmation just means these are confirmation, these are confluences, they're the same thing. And they're nothing different. Hold on. These are confirmation, and then these are confluences. So they're the same thing. These are the same thing. Yep, that's it. That's it. Any questions? I think that's pretty much all for today. Order block. OB's order block. BOS is break with structure. OB's order block. Mitigation is just another order block that's been activated. And then of course, bearish indicates structure. And yeah. So as time goes on, you keep piecing it together. Oh, and as you can see, DXY closed. Let's check DXY real quick. Well, I need to check DXY first of all. Okay. When the market opens, nah, actually, I don't know. I don't know. No, never mind. Yep. So yeah, that's all. That's all for today. Then week 4, I'm pretty much gonna go over. I think week 4, I will mark up, which means next week. I think I'll mark up every single one of these. But at a fast pace. I'm just gonna tell you. So what I see for Apple is this is how I enter. I would enter here. Okay, then Airbnb. This is what happened. I caught these blah 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 blah. You know, I caught the 50 of this, the 50 entry, took it to the upside, and you know, first take profit. I still want to go here. There's another entry down there. Yada yada yada. ACB, same thing. ACB does an entry down there actually. Well, ACB has an entry here, which is why I think like down somewhere down there. But as you know, it hit the inefficiency. Price come up here. I do kind of want to see them to 7, but I don't know if that's going to happen because you do recall with your news that y'all people use. I'm sorry, the news that people use. Joe Biden was saying something like he is suspending people who was using weed, even though he's using it on like legal states. AMC, I have it going to 20. AMD 74. Alpha, I forgot where I was expecting this to go, but yeah. So it hit my entry of 14. We are now in 22, so now we're sitting at 19, and then I'll pretty much describe every entry I have, erasing everything, you know. So this one, I think this one didn't go how I wanted it to go, but BA, you know. So like, yeah, I told you just now break of structure, we might become bearish on Boeing, BAC. Seems like we got the 50 entry, but yeah, like I said, that's yeah, that's Blink. I don't know. Wait. Oh, okay. Yeah, so I'm gonna go over all these next week. Yeah, so like why enter right there, or rather why would enter right there, all that kind of stuff. So, it's yeah, uh, different formation of BTCs where I can see, breaker structure where my entry is. Entry down there, probably maybe the 5 minute time frame, I don't know. But let's see if I can find. Yeah, my entry is down there, and as you can see, we are still writing it up. Oh, perfect, gorgeous accumulation here. I don't think price has hit 61 just yet. Maybe it has. I don't know if it has, but prime flaw example of lower time frame accumulation. This is really gorgeous, matter of fact. Yeah, but I can't really necessarily see it. Let me make this white for y'all. Flawless right there. Yeah, so as y'all can see this right here, this is definitely accumulation on accumulation, okay? So you can technically take this right here or take these right here, and then that's your entry right there, breaker structure, and it's just accumulation on accumulation. And then you can also see more here. There's more right there, but the price target will be up there. Of course, you have liquidity sitting around. And then, of course, you have some here as well. This is actually what we call reaccumulation, but price comes here, then your target is up there. So you hit your target, then you get another form of accumulation again, like above right there. So now your target is up there. So if you want to keep entering, going out, you would just have to be able to see these things. Like it's really repetitive, So once you really learn what you're doing, then let me put this on 1 hour. So like once you really know what you're doing, then yeah, like why did I say CBET was going to buy from here? I'll probably explain CCIV. Why did I say no, this one of those or whatever that is, you know? So I said price is coming down here. There's an arrow. I'll probably explain what I saw down there. I'm just going through all of these. Yeah, so I remember when this plate was sent out and I said it was bearish, but the thing was like, I want to enter lower, but I don't think it ever came down to my projected. So basically, yeah, so it's yes. So it was bearish for me right here. But when the market, it was bearish for me, bearish. Okay, so when it was sent out, it probably should have been taken once it hit right there, okay? And then, of course, price came down and broke structure right there. So it became bearish and became bearish again. And then it just never went all the way down as I wanted it to. And it almost did, but not all the way. But it took off without me, so let me see 2 hour. But yeah, like I said, next week I'm gonna go over all of these, and then we'll take a look at how they look, how I enter. This one's indefinitely bearish, most definitely. I think there's a demand zone down there, so we can see it go to 107. But we'll see. I mean, I gotta take a bit better look at it. Liquidity to capture, bearish market. We have a breaker right there. Let me see like a 15-minute. Any form of distribution yet? No, maybe maybe go to 35. No. So I like to see price continue to break structure. And I want to see price probably like move down just a little bit more. So let me go ahead and use that trend line, use this right here. So basically, I kind of want to see come a little lower, come up here, come down to demand, and then maybe take off or something like that. That's what I want to see. So yeah, that's basically what I have here. And then of course you can see we have an inefficiency gap right there. So yeah, I guess. But where's my other phone? This one. Okay. Yeah, I'm gonna watch back on. So any other for Julia's question, last question, what is that gap that needs to be filled? This is a gap. Like, the market either pre-market, basically. So basically the market opens up or down, that's what the gap is. And from what I see when I watch the market is basically the goal of the market is technically to go up and down. I'm sorry, not up and down, to capture liquidity, to capture stop losses, to get gain money from retail traders, and to fill the gaps. Because the thing is, there's not supposed to be gaps in the market, So I mean, if I take you to forex pairs, you're gonna see how like there's never really gaps, and if there is, majority of the time it will be pretty much covered and all, so yeah. All right, perfect example of breaker structures, entries, accumulations, upside, but like once you learn how to chart, you can pretty much chart any single thing. This was going my way until of course we can see DXY started shooting up, but yeah, but my stop loss was at break even anyway, so didn't really matter. Yeah, stop loss break even there, let it ride. I mean, I took partials, I guess. So yeah, same thing. Yeah, I was sitting at what, 98 pips? I mean, my target was what, definitely 180, but that's a lot. That's a lot, But yeah. Yep. All right. BST. VS2, VS2, VS2. Oh. All right. Well, quite a massive gap. Um, on the lower time frame, we're bullish. On the higher time frame, we are bearish. Personally, I wouldn't even touch it because I mean, I'm pretty sure Dion, or no, I'm pretty sure you're in this trade, but yeah, most definitely it's uh, it's bullish for now. That's all I can say. It's just bullish for now. I mean, they'll have to take more time to really look at, but I mean, your entry is down here, of course. So let's say you want to re-enter. I mean, I like this mini formation of accumulation. You know, so if you want to day trade it, of course it's your spring. We could get a test, like you see, because this is also what we call liquidity. So there is a possibility a price can come down here. So if you're in trade number one, it's your entry number one. Entry number two can definitely occur down there, which is 1697. So what could possibly happen is that price can gap up to like right up there maybe, and then come down. And you know, because you're gonna want to fill that little gap, and then that's a possibility. I'm not saying it's gonna happen, but it's just a possibility. Yeah, but just a possibility. Yep. What time is it? Then we've been for 2 hours. Yeah, I'm gonna close this call then. All right, that's good. Let's, but yeah, yeah. Any other questions? Matter of fact, let me click. Yeah. Yep. If you don't have any questions, you can just leave. I'll probably just keep this call up for like another 5 minutes just to see. And if you want to speak, then you can just let me know, you know. On y'all. Alrighty, like I said, y'all can take your time and get going. If no one else has questions, we just continue on from there. Just make sure this thing was recording. Nice. Let me stop recording.